Good morning, this is Robert Kaars Sijpesteijn bringing you this morning's market update. A renewed drop in oil prices yesterday applied pressure to Wall Street, undercutting momentum that was picked up yesterday and caused the market to slip. Energy shares fell 3.2% after making similar gains the day before, and financial shares fell 1.8%, the worst performing sector this year. The US 500 lost 19 points to close on 1,917.58. The US Tech 100 declined 53 points to close on 4,157.30, and Wall Street was reduced by 145 points to close on 16,409. In commodities, gold renewed its rally, gaining $20.50, closing on $1,230.50, while Brent crude lost $1.76 to close on $32.91 a barrel. The negative momentum follows the IHS Cera Conference. The world's most powerful oil man brought a harsh message to Houston for executives hoping for a rescue from low prices. High-cost producers, many of them sitting in the room, need to either lower costs, borrow cash, or liquidate. For the thousands of executives attending the conference, the message from Saudi Arabia Oil Minister Ali Al-Naimi means deeper spending cuts, laying off more roughnecks, and idling rigs. It sounds harsh, and unfortunately it is, but it's the most efficient way to rebalance the markets, Naimi told the audience in Houston on Tuesday. For the oil industry itself, the warning is a sign of more months and perhaps years of financial pain. The S&P 500 Oil and Gas Index has fallen roughly 60% since mid-2014 to its lowest level since 2009. The debt of junk-rated US oil companies is yielding more than 20%, the highest in at least 20 years according to Bank of America Corp. Niami told the executives in Houston that Saudi Arabia believed that freezing oil production, as it just agreed with Russia, would be enough to eventually balance the market. Over time, high-cost producers will get out of the business and rising demand will slowly eat up the oversupply, he said. The International Energy Agency believes that means another 2 years of low prices. The freeze agreement isn't cutting production. That is not going to happen, Niami said. In Europe, the Germany 30 dropped 149 points to close on 9,382, and the UK 100 was unable to remain above the 6,000 level despite the London Stock Exchange Group and Deutsche Boerse making their third attempt at a merger in 2 decades, in a bid to create a dominant European exchange operator worth more than £20 billion. LSE confirmed that it was in merger talks with Deutsche Boerse yesterday afternoon after reports of a possible deal sent the London Exchange's share price soaring. The 2 exchange operators said in a joint statement that they are in detailed discussions about a potential merger of equals of the 2 businesses and expect to provide a further update in due course. Despite this, the UK 100 lost 74 points yesterday to close on 5,934.7. In today's corporate news, Barratt became the latest house builder to announce stellar results with a 19% increase in revenues to £1.87 billion in the 6 months to the end of December. Petrofac said revenues rose 10% to $6.8 billion in the year to the end of December, and Weir Group said its revenues fell 22% in the year of the beginning of January to £1.9 billion. Today's economic data in focus at 9:30 a.m. BBA mortgage approvals was released. At 11 a.m. CBI distributive sales index is released, and at 2:45 in the US market services PMI is released. That's all for this morning's market update. Thank you and goodbye.